And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this mediocre Monday. I hope you all had a great weekend. It's time to again look at my portfolio, my positions for the week, and also catch up on some things that expired last week. But before we get to that, as always, let's get the usual disclaimer out of the way first. Everything I share in this live stream/video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, for everybody that tunes in for the first time, also the reminder, all the tools that I'm using, so the charting software, the strategy I'm using, and everything else I'm actively using to manage my portfolio and trade/invest is linked in the description down below, so you can check it out. For example, I really recommend that you check out the Elliott Wave principle, which you can read online for free if you follow the link in the description down below, or you can also, like I did, order a physical copy. With that, let's jump into it. I'm going to share my screen. We can hide the welcome message. Now, there you go. One thing I want to start, last week we had two put options in SPY. Actually for the entire week, and they initially went well, then they didn't go that well, and then on Friday we actually in quotes got lucky and we saw another downward movement. Now one of those two put options got closed by Interactive Broker due to in quotes margin violations. So because if they would exercise, like my account would not have the required funds for it, which came as a surprise. And then there was another surprise that I only noticed yesterday when I checked it on the phone. I mistakenly confused SPY and SPX as far as that goes. So nobody's perfect. There's always something to learn. And assumed that SPY would also be cash settled, which means when the option expires, you just get the money. There is no shares. Well, I was wrong because now I have a short position in SPY. Our 550 SPY put option actually expired in the money, and I'm actually now short 100 shares of SPY. Now, since we paid a premium for that option, we are not really $450 in profit, but probably at a small loss right now. The question, however, is what to do today in 2 minutes when the market opens, because the pattern here looks suspiciously as if this could still be A, B. So we have 5 waves down, A, B, C up. And now we have a 1, 2 and a push for 3 down. So either closing it at market open and just ending the position would be one option. And the other option would be, I'm going to clear the alert history here real quick. And the other option would be to basically hold those until we reach a potential turnaround target. I mentioned it last week. Very often when we have retracements, those retracements play out as 3-wave patterns, A, B, C, for example. And very often they turn around at the 38.2, 50, or 61.8 retracement level. And it would actually be quite fitting. I mean, let's see what else. Wave C target, the third one would be here. So if this is indeed A, B, C, we would expect that this is 1, 2. Again, then we have 5 waves down here, or should have 5 waves down here. We have a retracement to the 38.2 area where we seem to bounce, and we should then get another 5 waves further down, in which case holding those 100 short shares is actually, or might actually not be a bad idea. It's going to be really, I don't know, tricky. We're going to watch the market open. That happens in 29 seconds. If we get a strong movement up, we'd close the position. We know that on this option we had, I don't know, like the risk was like a couple $100. So I cannot look it up because I only had a mixed entry for both options, which is a little bit stupid or annoying right now. But basically, if we are lucky, we'll get a strong movement down. If I'm wrong, then that was the entire correction. This is the next wave 1, 2, and we actually get a strong wave 3 movement up. In which case I would have to close at 550 the most, because at 550 we would pretty much lose exactly the option premium we paid, which would be okay. It still means a couple $100 loss, but there we go. Now outside of that, in GameStop, we have our outlook has said that we might still go a little lower, which actually already happened. We didn't reach a new low, but from the looks of it, I would assume this will be what I mentioned last week, potential 1, 2, 3, 4, 5. So we'll get a little bit lower, which means by the end of the week, I mean, we'll have to see how today and tomorrow go. Based on last week, I would actually have thought that this week we already will finish above 30, but from the looks of it, it might not be possible, which brings then the question if I will want to hold on to the $30 puts, or if I will want to sell them potentially for a profit as the week progresses. Now, we also have our $30 call options. Now we're gonna check real quick. So we got $69.10 per piece times 4, so 276. So far they would be at $161 profit. I'm gonna hold them for now because, like, unless we start an upwards movement, we could not sell the same ones for more money, obviously. So yeah, we're gonna just hold them to expiration. I could obviously try to determine, okay, how far do we go here? And when we're at the, in quotes, lowest, sell the $30 calls. And when we then start the upwards movement, when we are then at a higher point again, sell the same call options again. But I think it's the safer play, even though not as profitable, to just hold them till the end. They likely will, I mean, we'll see. If we finish above 30, it just means I'll lose some share. If we go below, or if we stay below, then on one hand, my $30 put options might print and I'll get another 100 shares. On the other hand, my call options expire worthless. And yeah, so that's the one thing. Now, other than that, surprising news. Keith Gill, the aka Roaring Kitty, aka Deep Fucking Value, disclosed apparently that he owns 6.6% of Chewy. And surprisingly, it's exactly, what was it, 9,001,000 or 9,010,000 shares. So the same number of shares that Ryan Cohen originally bought in GameStop. It's a surprise that nobody saw coming. I assume that the media will spin it in a way that, oh, maybe he sold GameStop to buy into Chewy. I don't think that's the case, but we'll only know with future disclosures what exactly happened. I think he just had extra money and made another options play that paid off very, very well. If his options were the reason that the movement up here started or not doesn't matter as much, but it definitely paid off. However, if we look at the pattern for Chewy, we can see we potentially have a 5-wave move up here, which might be wave 5. So before the IPO, there's some value or some development. Then that would be maybe some hype at the end of wave 3. We get a wave 4, and then when they went public or after they went public, we have the 5th wave, which means we would expect here in 1, 2, 3, 4, 5. So like, or actually an ABC pattern, so a corrective pattern. And it's hard to say, at least on the monthly chart, if that's already done. If that's the case, so if that's down here somehow ABC, then we would now be in the next 5 waves up, and Keith Gillen would have managed to actually get into the whole thing. We don't know his average price right now, but he would have managed to get into the whole thing basically pretty much at the best price possible. And from here, we'll enjoy further profits down the road. I'm going to stay out of Chewy simply because we don't have, or I don't have extra spare funds, as we can see. I'm going to have to see how our positions develop. We can see our GameStop shares are a little bit underwater, but that's okay. We sell options against them, and overall they are actually, our average should be around $17 per share, so we're still good and are making further profit on a weekly basis. Now I'm probably notifications here, okay. The big question for today, however, I said, is SPY to decide what we do with the 100 shares that I'm surprisingly unexpectedly short. We can start by, just gonna put the book away. We can start by asking the magic 8-ball that, as I mentioned previously, Keith Gillen actually inspired me to get. And let's just ask the 8-ball, will SPY go down from here? Without a doubt. So yeah, I wish I could have a camera set up some way to show this, but if I flip the ball, then the thing that it shows also flips. Maybe I'll set a over desk camera up again or so in the future. We'll see. And then let's ask it, will GameStop finish above 30, which I actually hope for, but now based on the pattern, think might not happen this week, so we might have to be a little bit more patient. So will GameStop finish the week above 30? Concentrate and ask again. Okay, will GameStop finish the week above 30? Same answer. Will GameStop finish the week above 30? Concentrate. It is certain. Okay, so we note GameStop above 30. So figure 30 and SPY down. That's the 8 balls prediction. I'll have to write it down so that when tomorrow we ask the same thing again, we actually have a comparison. Yeah. So, yeah, not sure what else we can do for today. I mean, I said I will have to keep an eye on SPY simply because of my exposure. Obviously, as you know, I started the portfolio with 10,500 euro a month ago or 6 weeks ago. Brought it up to 15,000, got 500 GameStop shares, directly registered another 100 of them. But obviously the short position in SPY has a $50,000 exposure. So while I still have excess liquidity, and thanks to it being a margin account, I didn't get that position auto liquidated. The question really is like, what's the best play here? And it mostly depends on how this pattern here subdivides. So if we, I don't know, I see maybe a 1, 2, 3, 4, 5 down here, which makes this ABC. And if that's ABC, although the ABC might not be finished yet, so if that would be A, B, C, then we could potentially go up to the 50% retracement. So then that would be some outlier here that we ignore for now. So that would be the next 1, 2, 3, 4, 5. And then from there we go down. But then the question would be, should we sell now? At which point we probably still are looking at a theoretical loss. Or is it possible that wave C finished here on the minimum target, and from here we right now actually in the process of getting 1, 2, 3, 4, 5. In which case, I mean, we can see the $5 equals $500 in profit. So if it goes to the 540 mark, would secure another $500. Not sure if it's worth it, to be honest. So actually, I might just get out of the position. So I didn't plan to get into it in the first place. So we're just gonna solve the problem. So mid price, submit. There you go. Thank you. What? Not allowed. Okay, now it did it. Yeah. Okay. So we might have secured or locked in a net loss on that position again. Maybe I can still see it. So 1 second, I'm gonna bring over option strat, save trades, and there we had the expired, the long puts. So we got those for 499. So we locked in a small loss. Oh no, we got those for 428, and we now close them for yeah, how do I calculate that? So basically $4.42. So 442 is what we got. 442. Yeah, like maybe I'm just rusty. So basically 550 minus 545 times 58. Yeah, so 442 is what we closed it at. So if I update that, 4.42. So we're still a minor profit. Okay, so I mean, considering how SPY developed, I think there is the possibility that it will go further down, but we usually would like to stay out of things like that, so not hold the shares in SPY. So I mean, while I could have sold it better or waited or whatever, considering that we had this upwards movement and basically on Friday just went into profit again, I think the outcome is quite okay. It was not a substantial profit of any kind. In between, we could have closed it for like $500 profit, which we didn't. So I also have to update it in just a second in Theta Gang, personal no trading Theta Gang. So I think that's overall not too bad. Where do we have the? No, where do we have the buy long put 550, and we closed it at price closed at 442. Yeah, so that should, yeah, that's better. So yeah. So it could have gone better. I could have secured a couple hundred more profit if I would have sold them during last week, but I really thought that we will not get such a strong move here. And that strong move is also what ruins the pattern a little bit, because here we retraced further than we would have thought. So if we look at this here and assume those are 5 waves down, then we bounce at the 50% mark. And I assumed then from here we will go further down. But then this here happens, and then the positions were actually, I mean, maybe still slightly in profit, but there they were at a loss. So yeah. Anyway, it turned out still at a profit. So we're gonna keep an eye on SPY to potentially get a few more trades in as we go. For now, however, we can just wait and see how it develops. From the looks of it, I would expect it, even if potentially we go up to 546, to still then follow with another drop. But yeah, like for today, we're probably going to stay out of it. Maybe I'll look at it for before the market closes again to get some options that expire on Friday, or even 1 DTE, so that expire tomorrow. GameStop, yeah, GameStop is going to be now just a waiting game. I mean, we can clearly see that we have the movement down here that's just barely not yet violating that point. So, and if we look at things, question is, one of the questions is that here 1, 2, 3, 4, 5, and then ABC. So that is actually most likely an ABC correction. So we have 5 waves here, 3 waves here, and then another 5 waves that reach the minimum target. So this one here, 61.8. And then we would have here 1, 2, and 3 down. And then we can actually go the other way here with an extension. And would expect that GameStop's wave 3, 1, 2, 3, 4, 5, finish it somewhere in the area here at 22. Then we would get another push up in wave 4, and then we would get another small push down, probably to the 20 area. And from there, we then finished another 5-wave pattern that potentially finishes the whole correction. And from there, we then should see further upwards movement, but it will take time. So we'll just, in the meantime, we'll just continue collecting the premiums, get another 100 shares potentially, this time not at such a great price. So we sold the $30 puts, got $538.90 in premium. And if we finish below 30, we'll actually get shares assigned at 30. And considering the premium, that means we get them at 24.31.10. So let's say 24.31. And right now we obviously are below that, so we would get shares at a little loss. However, we can then again every week sell 5 covered calls, although also not for such high prices, because as we move, let's buy, yeah. So as we move, first of all, the volatility, the implied volatility is currently lower, and second of all, as we move, you can see, for example, right now we could sell, and that's June 19th. If we look at the weekly options. So if we look at this Friday, the $30 call option brings $30 or 28. So if we sell 5 of them, it's like $130 in a week. So it's like a 1% return. A 1% return in a week is still not bad, however. So yeah, if we go lower, then we also get less. So might be that we get a little bit below 1% return per week for the foreseeable future. But on the other hand, we also hold a bunch of extra shares. And as we continue piling up premium, those premiums actually drive down our average. And with a lower average, I get to the point where I can, for example, directly register more shares. And if in between we're shooting up, that's also fine, because then those shares get called away and I still have my shares at ComputerShare. Now, I think, yeah, I'm not going to look in the other stocks that we're currently holding because we're holding relatively small amounts and I just don't care too much about it. And I still have other things on my list to do. But I think we'll call it a day here. So, yeah, again, so according to the 8-ball, SPY will go down, which now would be a pity that I closed that now that I closed out the position. But I also believe that it actually will go down. It might go to 46 first, or it might go down from here directly. And I would expect it to reach the 538 at least, depending on what kind of overall pattern we're correcting here. It's possible that it even goes further, but I mean, nobody expects that, yeah, because stocks only go up. So, yeah. And as said, GameStop waiting game, we'll see where it finishes today. If there would be some substantial movement, I'd jump online later. But that would only be the case if that would be some weird ABC pattern. The moment we breach 22.55, that can be ruled out, and we will then likely see a little bit more movement down. As long as we stay above the 22.55, it's still possible that this is some 1, 2, and we now will get wave 3 up. So if we would get some strong movement, I'll jump online again. If not, then that's also okay. And we would see each other then. I'm going to have to check the calendar if there's anything scheduled for tomorrow. No, just my morning live stream. Yeah, so yeah, okay, yeah, but yeah. Okay, so there's nothing else scheduled for tomorrow. So with that, thanks for tuning in. I hope you were able to take something away. Don't forget, like, subscribe, enable notifications so you get notified for the next streams. And to all of you, a pleasant and profitable trading week. See you then. Bye-bye.